Hello and welcome back for another edition of London Direct. The UK's economy has been outperforming many others in Europe, but what does this mean for the UK's policymakers? Well, I've been along to the offices of FxPro to find out what they think. Obviously, we've seen UK GDP improve a lot in the last quarter. But what does that mean in terms of the policymakers, starting with George Osborne? We've got his financial statement coming up. Does that mean that he's going to be inclined to loosen austerity?
I think he might take the foot off the accelerator or the brake a bit, but only a bit. I mean, we have to remember we're still climbing out of a hole. So whilst politicians say, oh, we're growing, we're doing up, we are climbing out of a hole still. The economy is still smaller than it was at the peak of the cycle in 2008. So although the politicians do like to celebrate, I don't think it's necessarily that we can ease back on austerity quite yet in terms of the bigger picture. But just
to say, but doesn't politics get in the way here? Because he's got to stand in front of the nation and deliver his policies, and he knows there's an election around the corner.
Absolutely, that's why we have Help to Buy. That's why we have construction, really outperforming in the second quarter as it was, and it's likely to do so in the third quarter. Even though it's a small, overall of the economy, it's about 6% of the economy overall in terms of its contribution to overall output, but nevertheless it is doing very well. So that's what Help to Buy for. I couldn't link the two, the election in May 2015 and the fact we have a scheme supporting the housing market, but nevertheless it's there. I think what's interesting for the Bank of England is more in the composition of growth. They've always wanted to see us, as the Fed has to a degree of the US, move to a more sort of export-orientated, investment-led economy. Of course, we can't all be export-led economies unless we start exporting to March, but that picture isn't turning out. We did okay in the second quarter. The third quarter GDP, the details we get is like to show that exports were a net detractor from growth in the third quarter. So yes, we're getting the growth. I'm not quite sure we're getting the growth that the Bank of England wants to see. Number one, because of sort of construction-led housing markets contribution. Number two, because although investment did well in the second quarter, growth, the net trade is likely to be detracting from the third quarter. So the balance of growth isn't quite where perhaps the bank would like to see it.
Yes, let's talk about the Bank of England in more depth. Lots of policymakers be making lots of different speeches. But one of the clear things is that they say they want to see low rates for a sustained period of time. And I know we're back into this game of guessing when another central bank will begin to shift their monetary policy, but what does a sustained period mean to you?
It's getting a lot more confusing. They brought forward guidance in August, and since then I think it's been a not very successful strategy. The ironic thing was from the November inflation report, we actually saw inflation projections revised downwards out to the 2-year horizon, which is where they operate. And normally that would then see interest rate expectations for people's expectations of future policy being pushed further out for the first rate hike. But the opposite happened. Why? Because they have this unemployment rate. The intermediate threshold is not a target, and that in itself, because that was brought a lot further forward by more than a year into closer. Because of that, we then saw interest rate expectations rising. So it's a very strange reaction, but that you would normally not have seen had they not introduced this. So for the bank, yes, I think that they want to emphasise forward guidance. The Fed has done it very successfully. If you look what's happened there, it's sort of made in the middle of 2015, we've seen a nearly 70 basis point fall in rate expectations. The Fed has done its relatively successfully. I think the bank is struggling really. There's a lot of intermediate targets, a lot of caveats going on. So really, I think the bank is struggling. So at the moment, yes, they want to say that rates are going to remain low, but the guidance they've given and what's happening in the economy is actually turning the other way and causing people to price in earlier rate hikes.
Yeah, just to finish off the fundamental picture, we've seen the UK economy outperform many other G7 economies out there if we take the preliminary Q3 data. Obviously, we're a country of born sceptics. So what are the bumps ahead for the UK economy? What's going to drag on growth?
We still have a relatively decent amount of austerity coming through, so that's still that certainly delayed the recovery. And some estimates suggest that took off probably more than 1% of growth from 2010 to 2012. So that is still a constraint. Of of course, the fear is that it's just a sort of, you get the initial bounce. This always happens in recoveries, and eventually you get the sort of acceleration of growth to above trend, and then something that then sits down. And what question, once we've achieved what people have called escape velocity, to use another phrase, is what is a new normal? Do we then have to be happy with 1.5 to 2% growth, whereas previously we were sort of disappointed if growth is less than 2.5? And that's a big question. I think we are in the new normal where we're going to have to get used to sort of, if growth, the economy expands 0.4, 0.5%, that should be something we should get used to. But we need to also, I think, be assured that we're not just relying on a small sector of the economy, relying on perhaps the housing market to boost growth in a sort of temporary and unsustainable fashion, as some are speculating might be the case at this point in time.
Yes. So what's the trading implications of all of this? As I said, the UK economy is looking stronger than many other G7 counterparts. So is it just a case of buy the sterling against all other currencies?
For FX is never that easy. If it was, we'd all be doing something else. It's not. I think for sterling, it's done well in the second half of the year. On a trade-weighted basis, it's probably just about or slightly above where it was at the start of the year. I mean, it all depends what happens to the dollar. Will the dollar be strengthening drastically because of tapering? I don't think so, because the Fed have very successfully split the difference between tapering and tightening. So overall, I think sterling should hold its ground, but I think the euro is actually looking pretty perky into year end. So I think versus the dollar, it actually may slip, but actually the euro, I think, could slip also as well. So I think the other economies are actually the dollar because of moving into tapering. The euro area, for other reasons, it has a strong current account balance, and it's doing, even though the economy is slowing, it's got low inflation, tend to be good for a currency. So actually sterling will hold its own, but probably slip versus those two currencies in year end because the fundamentals for those, at least near term, look better.
Well, some great analysis there from FxPro. Stay tuned to Dukascopy TV for more interviews, but for now, goodbye.